Welcome to today's financial market update. This week has been a roller coaster for global markets, with Monday seeing a continuation of last week's sell-off driven by concerns over U.S. economic growth. The Japanese Nikkei experienced a dramatic 12% plunge overnight, setting a cautious tone for U.S. markets. This downturn was largely attributed to the unwinding of the yen carry trade, following a rapid strengthening of the yen against the dollar. On Monday, we saw significant losses across major U.S. indices. The Dow Jones Industrial Average closed down 2.6%, while the S&P 500 and NASDAQ Composite fell 3.0% and 3.4% respectively. The S&P 500 flirted dangerously close to correction territory, ending the day 9.3% below its July 16th high. The sell-off was broad-based, with only 22 of the S&P 500 components managing to close higher than Friday. All sectors experienced losses, ranging from 1.7% in industrials to 3.8% in information technology. Notable declines were seen in mega-cap stocks and chip makers, with Nvidia experiencing a particularly sharp 6.4% drop. However, Tuesday brought a welcome reprieve. U.S. markets staged a recovery, with major indices closing up between 0.8% and 1.2%. While these gains don't fully offset Monday's losses, they do represent a significant bounce back. The Dow, which had shed over 1,000 points on Monday, regained nearly 300 points. This recovery was supported by several factors. The yen weakened slightly against the dollar, providing some stability to U.S. equities. The CBOE Volatility Index, which had spiked above 65 on Monday, retreated to 27.71. Positive earnings reports from companies like Uber and Caterpillar also contributed to the upward momentum. In the bond market, we saw some interesting movements. The 10-year Treasury yield jumped 10 basis points to 3.89%, while the 2-year yield settled at 3.98%. Despite these increases, both yields remain significantly lower than they were a week ago. Looking ahead, investors will be keeping a close eye on upcoming economic data, including the weekly MBA Mortgage Index, crude oil inventories, and June's Consumer Credit Report. As always, these indicators will play a crucial role in shaping market sentiment in the days to come. Don't forget to hit the like and subscribe buttons below. And remember, if you have any questions, feel free to leave a comment. That's all for today's market update. Remember, in these volatile times, it's important to stay informed and maintain a long-term perspective on your investments. We'll be back tomorrow with more insights and analysis. Until then, this is Pat Walker signing off.